Hi guys!
Hi there!
Let's talk about payday! That's right, getting paid is pretty much the main reason we all get a job and go to work every single day, so you have to understand it really well. Some of us, lucky ones, love what we do, even if it doesn't pay much, because we're able to make a positive impact on the world through our work. So if you are in that group, gently tap that like button to make a positive impact on our channel. And if you're still looking for that meaning in life, make sure to subscribe to our channel and stay tuned with all the videos that we make to help you build your dream life in Canada.
Alright, philosophy aside, in this video we will talk about two main things: what happens before you get your first paycheck in Canada and when you start getting your paychecks. And most importantly, we will break down your Paystub and explain what is what. If you're here simply to learn about your Paystub breakdown, you can go ahead and tap on a relevant chapter of this video. For those of you who like a little bit of background information to learn more about what happens before you even start getting paid in Canada, let's start here.
Let's start with talking about your contract and how it relates to your salary. Before you sign a contract, always make sure that your compensation and your role are stated clearly in your contract. Your salary is typically depicted in an hourly rate or in a yearly annual salary. Oftentimes, your contract should also include any additional bonuses or compensation, things like annual bonuses, signing bonus, any stock options, or stock grants. Now, the next thing I'll say is really important, especially if you're from some of the countries that deal with the tax in a way different than Canada does. Your stated hourly or an annual salary in your contract is actually pre-tax. This means that the amount that you see on your contract is actually not the amount that you will get in your bank account. That is because your employer withdraws taxes that they have to pay and you have to pay on your income before you receive your income in your bank account. We will cover a little bit more on this later in this video.
Moving on, let's talk about important things you should know about your payroll. For those of you who don't know what a payroll is, it's a list of all employees at a company who are entitled to receive compensation and benefits, as well as the information about the amount of those compensation and benefits payments. First of all, make sure you ask your employer about the payroll cadence. In other words, how often and when you should get paid. According to Canadian Labour Code, you should be paid at least once a month. And in most provinces, your pay period cannot be longer than 16 days, according to provincial laws. Generally, it's common for Canadian employers to pay their employees either bi-weekly or twice a month, and I'll explain the subtle difference just in a few seconds. Some employers may even pay you more frequently, and that's totally fine. Just make sure you're getting paid at least once every 30 days. And it's always a very good idea to read Canadian Labour Code and know your rights. So, if you're paid bi-weekly, you will receive your salary every 2 weeks on a fixed day. For example, on Friday once in 2 weeks. You will have a total of 26 paychecks in every given year. If you're paid twice a month, that would mean every 15 days, which means that your payment will be made on different days of the week. If your 15th day fall on a weekend or holiday, it's usually expected that employer pays you earlier. As a result, if you receive your salary every 15 days, you will receive 24 paychecks per year. So one thing to take from this is that one payment method is just 1 day longer than the other, which means that given your annual or hourly salary, you will be given less paychecks for the given period of time for the year, but each paycheck amount will be slightly bigger.
Next, if you're starting your job in a new company, make sure you receive an employee onboarding or employee information form. Some larger organizations typically send those forms before your start date, while some others give you this form on your very first day when you start your new job. This form typically asks you information such as your name, your email, your address, your emergency contact information, as well as your social insurance number and your bank information. Your social insurance number, your SIN, is important for your tax deductions as well as your record of employment with Service Canada. And your bank information is important for the employer so that they can deposit your paychecks on your bank account. Typically, your employer will ask for your void check or for your direct transfer information from your bank. Void check has information about your bank and bank account number, as well as transit. Additionally, you'll probably be asked to provide some other information like your emergency contact, your allergies, your dietary restrictions, or any other questions that might be relevant for your job. Your void check can easily be found in your online banking. Some employers may decide to send you checks by mail. It's not very common, but it could happen for some smaller or old-school organizations. Personally, we would recommend to stay away from such employers because mail always gets lost or gets delayed, and I personally prefer my money getting into my bank account when I expect it every single time. And I will not even talk about employers who offer you to pay via PayPal. Stay away from those guys, unless you're a freelancer and you get paid in a lot of different ways. When you receive your new employee information form, make sure to fill it out as soon as possible, because I'm sure you don't want to miss your first payroll. Because if you do fill it out a little too late, you'll have to wait until your next payment period, and that might be just too long. It usually takes about 3 to 5 business days to process the payment, and employers usually make the payment on fixed dates in lump sums. That means they will not make payroll payments outside the regular pay period, just for you as an exception.
As payroll approaches, your employer should issue you a pay stub a few days before you get your salary. There are several ways to access your pay stub. Some employers send it by mail and others do it electronically. In order to access your electronic pay stubs, you will be given access to a payroll system used by your company. When you log in, you will be able to see all your past pay stubs issued with a detailed breakdown of what you were paid and what was withdrawn.
Now, earlier in our video, we've mentioned that the amount that you actually get in your paycheck in your bank account does not equal the amount of your annual salary in your contract divided by the amount of the payments that you take in the year. That is because your employer is legally obliged to withdraw your income tax as well as some other contributions upon your payment. The only exception to this rule is if you are a contractor or a consultant or self-employed, at which point you're required to manage your own taxes individually. However, if you are a regular common folk and you work for an employer and receive your regular monthly or bi-weekly salary, the amount that you get in your bank account will typically be 20 to 40% less than the stated amount in your salary in the contract. And that's kind of the bad news. But the good news is that you don't have to worry about making those calculations yourself. Your employer has already taken care of everything. Now let's break it down and take a look at the typical pay stub. Pay stub's different in design, but the general layout is pretty much the same. And it consists of these 4 parts. The 4 main elements for you to be paying attention to are your and your company information, your pay period, your earnings, your deductions, and your totals and the year to date. This example is the pay stub example provided by the Government of Canada. So let's take a look at it first to understand the basics, and then we'll show you some variations. Your and your company information must first and foremost be correct and up to date. If that's not the case, you should reach out to your employer immediately to fix it. Your paycheck will also indicate some basic information about your payment, your rate, your date of payment, and the period you're being paid for. Next is your earnings. This is the breakdown of how much money you've made in any given period. And that amount is gross. That is to say that it's the total amount you've made before tax based on days and hours you've worked in any given period, multiplied by your hourly or daily rate. You can also see how much you've earned to date in the given year from the beginning of the year, if you're curious. Now, this is the good stuff here. It's always nice to see how much money you've made given the amount of time that you spent on your work. It's your hard-earned compensation. If you do any overtime hours or accrue vacation pay, the amounts earned will also be reflected here on a separate line. The typical vacation accrual in Canada is minimum 4% of your annual salary. Similarly, your sick or personal days off that you've taken will also be recorded here as earnings in case you've taken them during that period. Another thing that you might expect to see in this section is the statutory holiday pay. Any day that was a national or provincial holiday that you didn't work but still got paid for, because in Canada, the Canadian employers are obliged to pay you for the national or provincial holidays that you're not working. Lastly, any bonus pay or other incentives like tips, commission you receive will also be reflected in the earnings section. And remember, this part will always show you gross amounts, gross earnings, before any deductions. Now let's go to the bad stuff. Your deductions. This is the dreaded stuff that gets deducted by your employer for various reasons. There's no way around it because these are taxes. These are the taxes that you pay as a resident in Canada that covers things like free healthcare and a bunch of other social benefits that we barely ever make use of during our life in Canada. The first thing to pay attention to is your income tax, federal and provincial income tax. If you're in Quebec, you will see a separate line for provincial tax. In Canada, the tax system is progressive or graduated. We made a video about Canadian tax system, so if you want to learn more, head over to the link in the description box below or up top. So in this deduction section, you will see the dollar amount of tax withdrawn from your paycheck, both in this period and from the beginning of the year. The next line you'll probably see is employment insurance, or EI. This is the mandatory payment collected by the government for your employment insurance. This EI is collected from everyone, and if you lose your job, it enables you to receive temporary financial assistance while you're unemployed and while you're looking for a job. There is a bunch of conditions to what situations make you qualify for EI. We briefly touched on it in our benefits video. We'll leave the link to it below if you're interested. Moving on, you will see the CPP and the QPP contributions. Canada Pension Plan or Quebec Pension Plan, respectively. QPP is only for those who live in Quebec. CPP is for everyone else in Canada. It's essentially the percentage of the income we all pay to be able to get pension pay when we retire at the age of 65. The employee contribution is 4.95%, and the employer is supposed to match that contribution, totaling around 9.9% of your annual salary. You can also see additional deductions here, depending on what your employer provides to you. The most common deductions is your group insurance, so the private healthcare insurance that provides extended coverage. Such insurance is typically covered by your employer either at 100% or anywhere between 50 and 80%. So you will see insurance premium deductions here as well. Other deductions could include private pension plan, for instance, if your employer has an RRSP matching program, or provides other services that are partially subsidized by your company. Things like parking, meals, social club fees, professional designation fees, and so on and so forth. And lastly, you see your net payment. This is the final amount of earnings minus deductions that you receive in your bank account, and also the total net amount that you've received this year to date. And this is pretty much all. This is your pay stub.
Hope now you understand your pay stub and how you're getting paid in Canada a little bit better. And the next step is, of course, to understand how to file your taxes in Canada to report to the government. We will be making a separate video to talk about that in more detail. In the meantime, we suggest you talk to a professional consultant or an accountant to help you file your taxes if you don't feel confident doing it yourself yet.
Question for you guys. If you're keen on sharing your experience, of course. What did your first salary look like in Canada? How did you get paid? Let us know in the comments below. We'd love to hear your stories.
And that's it, guys. Thank you for watching. If you liked this video, please don't forget to hit the like button below and subscribe to this channel to stay tuned and keep up with our latest videos. And if you want to keep in touch, please don't forget to join our private Facebook group, where we and newcomers share our immigration journeys and help each other.
And that's it for today. See you next time, guys.
Take care.